Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news there's optimism. The Persian Gulf oil supply may be easing as satellite data shows 3 supertankers crossing the strait. Most were Chinese. But there are still 160 tankers trapped in the Gulf as Iran now effectively controls the passage. US moves now depend on Trump's latest mood change. And the latest update of US crude oil stocks showed another outsized reduction last week, and again far more than expected. Petrol stocks fell too, but more modestly, although that extends this decline to 14 straight weeks. US strategic reserves were reduced almost 10 million barrels last week. And staying in the US, mortgage applications fell last week, all on new purchase applications, because home loan interest rate benchmarks jumped. Refinance activity was stable, however. Those rising interest rates are a market response to rising inflation, and the latest Fed minutes reveal that most Fed governors are worried too. A majority warned that they would likely need to consider raising interest rates if inflation continued to run persistently above their 2% target. They wanted to drop its easing bias and signal its next move could be an interest rate increase. This puts incoming Fed Chairman Warsh in a tough spot because he was appointed to do the opposite. It looks like he won't have the votes. And there was a US Treasury 20-year bond auction overnight, and that brought slightly higher demand, no doubt in part because the median yield rose to 5.07% with a high of 5.12%. That is up sharply from the 4.84% at the prior equivalent event a month ago. Across the Pacific, analysts are cottoning on to how strong Taiwan's exporters are flowing. For April, they forecast a 52% rise, but it only came in at 48% from a year ago levels. Still, these orders ran at their second highest level on record. Meanwhile, China reviewed its loan prime rates yesterday and kept them both unchanged at record low levels. That means they actually haven't changed in a year now. In Malaysia, their exports surged on manufacturing orders. They rose almost 37% to a record high, accelerating sharply from March's upwardly revised 8.4% increase and far exceeding forecasts for 9% for April. This was their best export growth result since August 2022. And in Indonesia, their central bank delivered something of a surprise, hiking their policy rate 50 basis points when a 25 basis point rise was expected. That takes it to 5.25% and back to August 2025 levels. Driving the change was a need to strengthen the rupiah, curb imported inflation risks, and keep domestic inflation within the government's midpoint target of 2.5%. In Australia, a new labour market data series from the employer tax filings shows there were 15.5 million employee jobs in March, up 1% from a year ago, or up 147,000 more jobs. They were paid 6% more than a year ago. Obviously, some of this is for the growth in the paid workforce, and that extra pay is before accounting for inflation. The US Treasury 10-year yield is now just on 4.57%, down 10 basis points from yesterday at this time. And the price of gold will stay today up $33 at $4,533 an ounce. Silver's up $1.50 at just over $76 an ounce. And American oil prices have fallen $6 to be just on $97.50 a barrel, while the international Brent price is now just over $104.50 a barrel, down $5.50. And the Kiwi dollar is up 30 basis points from yesterday at 58.7 US cents. Against the Aussie were unchanged at 82.1 Australian cents. Against the euro up 20 basis points at just on 50.5 euro cents. That all means our trade-weighted index starts today at just on 62.2, which is up 30 basis points from yesterday. And the Bitcoin price starts today at $77,559 and up 1% from this time yesterday. Volatility over the past 24 hours has been low, at just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.